And hey, everybody, guess what? We are live. It's Friday morning, June 7th. Let's flex those muscles and stretch and get ready. We're going to learn something. We're going to have some fun. And look at that, Matthew and Linda. This is not a trick. This is not one of Matthew's video tricks. They're actually there together.
They must have had their ears burning. We were talking about you guys.
I'm sorry.
I wish I was behind you taking a picture with the three of us, though.
That right?
Yes.
Okay.
I'm still trying to get some technical things set up, so excuse me if we're moving around a bit, but we're happy to be here and joining with you guys.
So where are you? You're outside somewhere.
That looks
Yeah,
like
we're out at the Crown Plaza.
So fancy, Linda.
Linda needed that, of course. But
The heater.
just enjoying the outside as best we can, have some breakfast before we get the day going. For Linda, this is already like noon time, basically. For me, it's still early, super early.
awesome. And it looks like Katrina's watching in the actual Facebook group. She commented saying, I was wondering, I'm assuming she's referring to Matthew and Linda being together and the fact that that isn't a trick.
We also have Michelle and Alexa with us in Facebook too.
Good morning, Michelle and Alexa. All right, so as is often the case in our regular 97 and up calls, I have some ideas for things I can go through, but it's not about me. It's all about you. So does anybody have any questions or something you'd like to go over? Some challenge you had in the past week that maybe we can all help you with? Something you need to figure out on somebody's books, or something you need to figure out on how to get new clients, or whatever you've had trouble with. If I've had the experience, you're welcome to it. If somebody else in the group has had the experience, you're welcome to it.
I have a question.
All right.
I have a client that's cash-based reporting. Moved them, I won't say move them over, but just started fresh on QBO at the beginning of 2018. It's an e-commerce client, so there's a Square clearing account. The Square clearing account is eminently easier than PayPal, so it's like pretty basic. It's just they have their sales, the tax or whatever. I have historically been doing journal entries, and I'm trying to learn how to use forms. So there's two questions. One is at the end of 2018, there's a negative $1,500 balance in that account. That clearing.
Which account? The clearing. Okay.
Square clearing account, but if I filter just to see 2019, there's a zero balance. Yay! But I just don't know if that's just sort of like random that it's zero. I have a feeling reason it's not. With these clearing accounts for these payments, it's so hard to go back and figure out what to exclude. Because it pulls out, it transfers money out to the bank account as sales, but they don't match up on a calendar basis because there could be sales that were from Christmas time that are actually getting pulled out of the bank account in January. And I don't, so if you're going to start from 2018 with a bank statement and a credit card statement, it's simple. You just can go line by line and just, reverse out whatever portion of that statement was in the prior year. But with this, it's a little bit harder. I guess I might have to dive down into the reporting. But I'm just kind of wondering, my first question is, what are some thoughts about troubleshooting that? And do you adjust it at year end if it's a case basis? Because I was thinking you'd just end up putting that difference into, it's a negative and it's in the clearing account, it would be a balance sheet account, but would you even do that?
Right. All right. Somebody's got some background noise going, which is making it difficult to hear Kelly. So if everybody could please mute, and please unmute when you're ready to say something or ask or answer a question. But this way we can focus. Thank you.
So I just not really, sort of multiple questions, which is troubleshooting that, and how would you handle a clearing account that has a balance in it one way or the other at the end of the year for a cash basis client that needs to have tax reporting done? And the third part is how would you use forms instead of using journal entries to make these entries into that clearing account, for example? expense.
Okay, so before I go, Tammy commented in the chat, sounds like a timing issue, and I agree 100%. Does anybody else want to answer before I do? Because you know what happens once I start.
Can I answer?
Please do.
Your cash basis, the balance sheet really doesn't matter for tax reporting. If it zeroes out, then it really does sound like it's a timing issue, an in-transit thing. There are some open transactions at the end of the year. You can make a journal entry at the end of the year and then reverse that at the beginning of the year, but really all you're going to be doing is putting it in from one liability account to another.
Yeah.
That's the first part. The second part, I'm going to let someone else answer.
Okay, anybody else?
The question, it's an S corp with, and I don't know if there, I think there's certain revenue thresholds on the 1120S or what, I'm still learning the form, that you have to actually include financial statements, and I don't know what those thresholds might be for
I
S.
believe it's 250,000 in either assets or revenue. And
Yeah.
if you meet either of those thresholds, then you have to, there's always a P&L kind of part of the tax return, which is that first page.
Yeah.
But the question is whether or not you need to include the balance sheet information. And that's where the thresholds come in.
They're like probably around 300 something. So, and that that they might have to. And the other thing is the PayPal account is off by 27,000, and there's just no way to fix that because it just costs too much money to track this from it. I mean, like I'm helping out with this, so I'm just trying to find sort of cheap and cheerful solutions that kind of work that aren't like a real deep dive, but also I'm trying to understand the concepts. And so the timing issue I'd identified, but I wasn't sure if it's important to try to zero it out at the end of the year. So anyway.
All right, anybody else want to answer?
I think Gina's, based on what you just said, Kelly, I would do what Gina recommended.
Yeah.
Keep it clean.
Yeah.
You can still
Just
track and
leave
follow it.
it.
Yeah. But
with a negative clearing, it's a bank account that'll have a negative balance that will show up on the balance sheet. That's sort of the thing that I'm just wondering about.
Yeah. Well.
All right, I have some thoughts on that, but I just want to give others a chance to answer before I do.
But
I wouldn't ever have a negative asset account. I would turn it into a liability account because if you have a negative asset, it's essentially a liability. And I would also I would have to push back and say the balance sheet always matters regardless of the threshold. I don't go by the 250,000 threshold. I can have a balance sheet and a P&L for every account, any client, whether or not, they are under 250 or over. So definitely just keep that into consideration.
Yeah, I was going to say I was actually going to close it out to a liability account is what I thought. I mean, that was my initial thought, but then I was like, well, this is cash basis. Is that going to throw anything off? I guess not. I'm just trying to go through the mechanics of it and make sure that, that I'm not. And
I think if you're following it and you have the intention, what you're moving it. You're the one doing it. To control it. But the PayPal one, that's the one I'm like, oh, I'm curious what Seth's going to say because that one I'd be after that one.
Yeah.
Okay. Anybody else? All right. I'm going to let it rip. So first things first, every business is an accrual basis business. I don't care how they file their taxes. Every business is an accrual basis business. Say it with me. Every business is an accrual basis business. Okay. They may file their taxes on a cash basis, but that is only one very minute purpose for keeping books, right? I agree with Mariette. The balance sheet always matters. On the other side of that, when it comes to filing taxes, I heard a very logical argument once from a CPA that made a lot of sense to me, which is that if you don't need to include the balance sheet, you shouldn't, because when it comes to the IRS, less is more. You don't want to give them anything you don't absolutely have to give them that could raise more questions and invite audits and inquiries and those kinds of things, right? So his contention was, of course, you keep a balance sheet when you keep the books and you track all that, but when it comes to filing taxes, if you don't have to give them a balance sheet, you don't, right? So for that reason, you kind of take into the account the thresholds. So with all that said, the clearing account, the way to track and manage the balance to make sure that that everything in there is accurate is you reconcile it to zero every month. You do a bank reconciliation on that account with an ending balance of 0, and you clear off all the sales that came in against all the payments that went out, and it has to zero out. That way you know for sure whatever balance is in there, negative or positive, is a timing difference. If it's negative, it means you had some payments sweep out where the related sales were probably booked in the subsequent period, right? And sometimes that can happen. The timing can be off by just a day or two. Definitely a timing issue. As far as running it for only a period, that shouldn't matter because balance sheet accounts are cumulative, right? So even if you had something in one period that had an offset in another, it should still wash out in the long run, regardless of what period you set it for, because you have that balance going into the period. And Mariette, I know you didn't say provide a balance sheet. I just wanted to clarify that because of that kind of question in general. Mariette in the chat said, I did not say I provide a balance sheet, but I always can provide a balance sheet and agree with the CPA advice.
Yeah.
Balance
I
sheet always,
agree too. Just lift your skirt a little bit, not a lot.
wow. All right. So that should hopefully clear up the question on the timing difference. If you've reconciled it for 0, then you can actually run an uncleared transaction report on that account to see what hasn't cleared yet, and that should help you identify exactly where that negative balance is coming from, right? You know what I mean when I say run an uncleared transaction report?
No.
So you run the balance sheet, you click into the account, and then you filter that account to only show uncleared items.
Okay.
Right? When you customize that report and filter it to only show what hasn't cleared, this is of course assuming you've now reconciled it to 0 every month, then it should flush out anything that's adding up to that negative balance. You'll see precisely where it's coming from. And you should do that each time because that will help you catch and correct issues long before they become much bigger issues, right? I always do that with every bank account. Well, I don't really do it anymore, but when I'm training people to do it, I explain you want to actually run that unclear transactions report on every bank account and every credit card account right after you've reconciled it, right? Because that will also help you catch like stale items. Like if a check, from a year ago hasn't cleared, you want to clean that up. Follow up with the person, find out, did they not get their check? Did they not cash it? Did we duplicate it? That's usually what I find, is that we duplicated it. So one instance of it did clear. The other one's just sitting on the books with a permanent difference, right?
So that's a transaction detail report, and then you filter for unclear transactions?
Or you could just drill it right into the account through the balance sheet.
Account itself? Okay.
Yeah.
In this instance, with the Square, I think it's just, I just think it's classically a timing issue.
Right.
With PayPal, it's been very difficult because the client runs stuff through a sales platform that's the back end to the website that they sell clothing, and that platform I've never been really able to get good transparency into, and that platform is where the sales tax is split out from this payments into PayPal. So the sales tax, I don't know where that go. I kind of have left it with him to deal with. I mean, in a sense, like he has to deal with it, and it's not being dealt with is sort of an issue. But the sales come through into PayPal minus the sales tax that's held back somehow through the sale platform on the customer-facing website. So what I enter into PayPal is I take the transaction report by month, pivot table you help me make, and then I put in the sales. I enter in a journal entry for the fee, the PayPal fee, and trying to think of what else that is in there. Merchant services fees and the sale, and then if a refund comes through, the refund, I'll tell you why the PayPal thing doesn't balance. This is why, I'm sorry. Because there's constantly funds being pulled in and out because he automatically shifts all the funds out every single day, what's available. And so sometimes it pulls from the bank account to make refunds. Sometimes it pulls from PayPal to make refunds. So like literally would have to go line by line. And my parameters of my scope are not including all. So that's why it is kind of sitting where it is, because the level of work needed is quite monumental to be able to get a zero balance on that clearing account. Mm-hmm. And it's just, I'm going to talk to him about it today and just present to him again how he wants to handle that. But For right now, it's really the task is really quite complicated and time consuming for the amount of fee and probably his interest in it. So that's why I'm trying to figure out how to handle that with the
Okay,
client.
and so are you, well, let me put it like this. If you have a PayPal account, you can and should absolutely go in and get the monthly statement from PayPal and reconcile it just like you would any bank account. So that will make sure that you've accounted for everything in and out of PayPal. It sounds like the difference remaining there might be the difference between the gross sales and the sales tax, because it sounds like they exclude the sales tax from what they fund into PayPal.
I think the difference is that because I pull the refund in when the refund is pulled out of the bank account, I run that back through the PayPal clearing account. So that comes back through to kind of.
Okay, because the basic formula to follow on this kind of thing is as follows, and I just recently, actually just this week, put up a video where I talked about this. The basic and very simple formula on this is, first of all, the first rule of sales and sales clearing is just like the first rule of Fight Club is we don't talk about Fight Club. The first rule of sales and sales clearing is we don't talk about undeposited funds, right? So let's get that clear right up front. We never use the undeposited funds account because it's terrible. That's why we talk about clearing accounts in the first place. And so the first rule of a sales clearing account is sales minus payments equals zero, right?
I saw that. I actually saw that on your website, your Nerd Enterprises website. Okay.
Yeah, so sales minus payments equals zero. That's the formula that helps us understand really how to manage the clearing account. That's why it has to zero out. Every dollar of sales has to be matched up with a dollar of payment. So the sales come into the sales clearing, the payments come out of the sales clearing, and in a case like PayPal, what I do is the payments come out of the sales clearing and into the PayPal account, which is another clearing account that works a lot like a bank account.
Oh, so you have a sales clearing account, and then you have a PayPal clearing account.
Correct. So it comes out of sales clearing and into the PayPal clearing account, which is, again, you're going to set it up like a bank account. And then we reconcile the PayPal account. So he can sweep everything out to $0, but one critical thing that people do wrong on PayPal is, when you set up a PayPal account, you have to have a funding source. It's going to be either a bank account or a credit card, right? So that when something is paid for out of PayPal and there isn't enough money in PayPal to cover it, the money is drawn against whatever that funding source is. So it either ends up being a charge on the credit card or it's taken out of the bank account. And one of the classic mistakes people make is when they're reconciling their actual bank account. Let's say the bank is the funding source. They see money going from their bank out because it covered a PayPal payment, and they sort of usurp the PayPal account and book that payment directly to whatever expense it paid for. Big problem with that is you're often going to understate the expense, because if there's $10 in the PayPal account and I'm paying for something that's $25, then it's only going to pull the additional 15 that it needs over and above the 10 that it has. And so if I'm only recording the part that came out of the bank account, I'm understating the expense. So that flow of money absolutely has to go as a transfer from PayPal from the bank account to the PayPal account, rather. And then from PayPal, we pay for the expense, right? So it's
this one he pulls from Amex, but sometimes it pulls and it charges partially on Amex and partially it gets pulled out of. It's just
exactly my point. So he's using Amex as the funding source, which means that it's the same issue. You have a partial charge for the expense on Amex. So when you record the Amex transaction, that has to be effectively a transfer from the Amex liability to the PayPal account, right? You're basically taking a cash advance on Amex and putting it into your PayPal account to cover that difference. And then the entire amount comes out of the PayPal account to pay the expense. So you really have to follow the flow of cash on these things to get it right. And again, that way you're actually including everything that went in and out of PayPal, so that when you reconcile the PayPal account, you should have no problem reconciling it, because you'll have the full amount of every dollar that came in accounted for and the full amount of every dollar that went out to pay for these expenses accounted for.
So if it shows up, say it charges in full on the Amex, it shows up on the Amex statement.
Because PayPal had zero in it, you still show it as a transfer from Amex to PayPal, because the PayPal statement is going to show that payment. The PayPal account is going to show the transfer in from Amex, and then it's going to show the payment of the item out of PayPal. So you really have to think of these as two completely separate and unrelated transactions. I mean, they happen to be related, but that's how I always explain this to people, is that you have to treat them like they're totally unrelated. And that helps you think through what the accounting has to look like on it. Even if it's the full amount, like you pointed out, that's only because PayPal didn't have any money in it. So they pulled the full amount on the Amex, but still that full amount transfers from Amex to PayPal, and then PayPal pays the expense. So the payment out of PayPal for the exact same amount is going to be what gets booked to the expense account or asset account or whatever was, whatever was paid for.
Okay, so yeah, so then basically it's a transfer from Amex to PayPal, or effectively PayPal pays for, I guess we just transfer the payment.
Yeah, I mean, the way I do it, I don't like the transfer transaction type.
Yeah.
In QuickBooks, because you have limited dialogue for where to put things. You can't split things if you wanted to. So in a case like that, I would create a credit card charge on the Amex account where the offsetting account is going to be PayPal. And that way I have the full memo dialogues and everything, so I can describe whatever I want or need to about the transaction.
Okie dokie. And then in the PayPal account, it's booked as the expense is paid by PayPal, and
right. So it's a check or expense out of PayPal, which gets booked to whatever the appropriate, remember, and I always like to think of these things in debits and credits because it helps you think through the flow on the financial statements and what this needs to look like, right? So going back to when the money's transferred from Amex to PayPal, what am I doing? I'm crediting Amex because I now owe Amex additional money, and I'm debiting PayPal because I'm moving money into PayPal, which is being treated like a bank account. Then when I pay for the thing out of PayPal, I'm crediting PayPal, the bank account, and I'm debiting whatever expense or asset or whatever it is that I paid for. If it's a personal thing, then I debited just an equity account, right? So when you think of it in terms of debits and credits, especially if you're an accountant or bookkeeper who understands these things, it helps clarify like how to book it and how the flow needs to work, right?
I usually do better if I sit and think about the journal entry the double-sided entry, like debits and credits, and then try to figure out how do I transform that back into a form.
Right. So I love that you said that, because that's exactly what I'm saying.
Yeah.
So here's how you think it through in terms of the form. So I open up an expense transaction. We're talking QuickBooks Online, right? So I open up an expense transaction, and this is what I teach in my bookkeeping basics with QuickBooks Online video, which is out there and it's free. Is you open up that form, and the way you want to think about that is, so the source account, when I open that form, is the American Express account, right? That's the credit card I'm putting the charge onto. So whatever account is there in the top of that form, and you know what, let me share my screen so we can speak in specifics here. I'm just going to go into the QuickBooks Test Drive company. All right, so bear with me one second. Greg's not here to remind me to share my screen today. After all that banter about how we didn't invite him to dinner last night.
Uh-oh.
Hang on. I've got to share my screen. So, and I love this. I love explaining this because I think it gives it so much clarity. I'm not a robot. All right, so let's go pretend like we're creating a new expense, right? Everybody sees my screen, right?
Yep.
Okay, so the payment account here is, in this case, it's a checking account. Let's switch it over to a credit card, right? So let's say it was a Visa instead of an Amex. Same idea, right? It's still a credit card account. Bottom line, when I'm in an expense transaction, whatever account is here is being credited. Period. Very simple. This is your credit. And then all the accounts down here in the category area are your debits. If you can think that through logically and understand that conceptually, it will get so much easier to record any kind of transaction in QuickBooks Online or any accounting software.
You made this for us a long time ago, and I mean.
What is that? I couldn't see it that clearly.
It's something.
Oh, is that my T accounts? Yeah.
And I love it, and it's tattered, and I have to print a new one. But.
Yep, if you get the bookkeeping basics with QuickBooks Online, I go over those very same T accounts in my Google Sheet, and I give you access to a copy of that Google Sheet so you can have your own T accounts to play with. And it even has a simple trial, but I'll go online and show you all where that's at in a minute. But if you can think this through, so over here, if it's going on the Amex, then here, this is PayPal, if we had one, I'll add it real quick, right? And this is going to be obviously set up as a bank account. Okay, and then so whatever the amount is, let's just say it's $1,000. I'm crediting the Visa account, which increases a liability by $1,000. I'm debiting the PayPal account, which increases a bank account by $1,000. That's your debit and credit, right? If this happened to be a payment directly out of a bank account, same thing. I'm just crediting the bank account, which decreases its balance, right? Because a bank account is an asset. So if I took money out of the checking to put it into PayPal, same process, same concept applies. I'm crediting the bank account up here to reduce its balance and then debiting PayPal. I'm just moving money around on the balance sheet, right? I'm moving money either out of a checking account or into an additional liability account, and I'm moving money from a liability to an asset, right?
You know what, also, Matthew shared something with me, which many of you may know, but I didn't, is that if under the More tab, if there's actually, it says journal something, that actually shows you the backside.
Yeah, after you've recorded it, you can get the journal entry on any transaction.
And
Absolutely.
I didn't know that, so that was super helpful, because that's just a way for me to make sure I connected the dots properly in the form.
Yep, I use this a lot with customers when I'm online with them, where they're questioning the sort of validity of how a transaction was recorded, and this almost always clears it up. Because even if the client doesn't understand the debits and credits, I can look at this and then clearly explain, here's what happened. We have a charge on our credit card account for $34. That increases its balance. So I don't say it in debits and credits. I say it in increases and decreases, right? So this is increasing our credit card balance because we added a charge to it. And this is increasing our automobile expense, debit to automobile expense, right?
Yeah.
So yeah, I use that a lot actually to help explain, because I don't necessarily know looking at the surface of the transaction. And usually where this comes up more often than anything else, especially in e-commerce, is where they're questioning whether it's cost of goods sold is being booked accurately. So I go into an invoice or a sales receipt from the sale of some products, and I run this transaction journal report, and it makes it very clear what amount went out of the inventory asset and what amounts are going into cost of goods sold for each item in that transaction. And so I use that frequently to confirm with the client that it's got the right cost of goods sold numbers are being booked, because that's where a lot of things get questioned very often. And another thing real quick, Kelly, going back to your original question, when it comes to having these kind of clearing accounts, since they are being set up as bank accounts, which is good because this way you can write checks out of them and things when you need to, what I will usually do in the chart of account structure is section off the actual bank accounts versus the clearing accounts. So I'll create parent accounts over them, and I'll have bank accounts, which is the real bank accounts,
Okay.
and then I'll have merchant accounts or clearing accounts as another section. So that way, if I do have a negative balance, I agree with Mariette. Best practice is to move it to a liability when it's negative, but that's not always practical because you still need to use it as soon as you move it to a liability, you can't write checks against it anymore. So I normally like to keep these accounts in the bank account area. You could do a journal entry just on the ending date of that period to move it to a liability and then reverse that on the next day. That way your balance sheet is really clean. But I wouldn't necessarily, and Mariette may very well have meant, to do it like with a journal entry like I'm saying, but I just want to make sure that's clear. I wouldn't change the account's type from a bank to a liability. I might just do a journal entry that I reverse on the last day of the year or the last day of the month, just so that as of the end of each month, I have a nice clean balance sheet that doesn't have negative assets in it.
Okay. That's very helpful. And I like the idea of segregating it, because it just, if you're, some days it's easier when you have little street signs to say, this is your clearing account, Kelly, make sure you click on this one. That helps. And it just also helps when reviewing the balance sheet, just to know what's truly like an asset account and what's really kind of, it's an asset-like account, but the clearing account. So if I was I know that you guys have talked about this before, but it takes me a while sometimes for things to sink in when I have a lot going on. What would to book a sale from Square or PayPal using a form instead of journal entry? I think you said you use sales receipts, but I don't know what happens when you have like the negative merchant fee. I didn't try it yet. If you can put a negative entry on the sales receipt. I couldn't remember that piece, so I'm just wondering.
So yeah, I mean, if look, if the sale ultimately goes negative, then we just flip it and do it in a check or expense form.
It's not going to be negative, but it might have a negative. Like, I guess we could do the sale and then the expense, and then then I'd enter the fee on an expense form. So just instead of doing multiple entries.
So yes, I always use a sales receipt. Because when you're dealing with an e-commerce type sale, it's really never going to be an invoice that's getting paid later, and it's a single sale, so that we shouldn't really have a situation where there's multiple payment methods on it, right? The whole thing is paid through that sales channel, whatever that is. And also remember, the payment methods are being dealt with separately. So I'm going to record the sale for all the items that sold, and we're going to deposit that to the sales clearing account. So the payment method here is irrelevant anyway, because if there are multiple payment methods, those are going to come respectively out of the clearing account and into their respective payment method clearing accounts, right? Because remember, we have a clearing account for each sales channel and then a clearing account for each payment method. So the flow is $1 of sales comes into the sales clearing, and then for each payment method that might be available in that sales channel, we'll have a credit to that sales clearing and a debit to the different payment method clearings, right? So to illustrate really clearly what I'm talking about, I had set this up for last year. Let's open a brain. Here we go. And I still have my e-commerce brain from last year. Oh, this might not be available right away. Let's see how long it takes to download. But the bottom line is I can have a sales clearing account, and then I can have PayPal as one payment method and let's say authorized.net as the other. And so I have two different payment method clearings that are essentially linked to that sales clearing, right? So $10 of sales comes into the sales clearing, and I have $3 that goes from sales clearing out to PayPal and $7 that goes from sales clearing through the authorized.net one, right? Because there might be multiple payment methods. So just so we're clear on how to deal with multiple payment methods, no impact on the sales receipt. So to go back to your original question, how do we record the sales? Definitely with a sales receipt, where the deposit to account is going to be the appropriate sales clearing account for whatever sales channel this sale happened in, right? So if it's Amazon, it's going to go to the Amazon clearing account here in the deposit to. Now, if in using Amazon as the example, Amazon takes reserves, right? So meaning they hold money back. And because of that, sometimes your net settlement can be negative instead of positive. You can't record a negative sales receipt. That means they've withheld more money than what they granted you based on that sale, based on prior reserves and whatever. So in that case, instead of a sales receipt, you have to do it as a check. Everything else is basically the same. In the check, you're going to use that products or services area, right? And then ultimately, that's going to be a negative out of your bank account and into the Amazon clearing, because that's what they do. If it's a net negative settlement, they pull the money out of your bank account, right? So that's the only case, and it doesn't happen too often, but it does come up, especially with Amazon, where you end up with a negative settlement, not a negative sale, but a negative settlement. So that's the one case where you couldn't use a sales receipt and you would have to do it as a check.
Okay. And then for the fee, the merchant services fee, I would be just use an expense form for that.
Well, so for the merchant services fee, again, that's going to usually clear with the payment clearing, right? It's not part of the sale. It's as you record the payments on that sale, you're going to record the gross amount of the payment minus the fee. Well, the thing about it is that we don't get this. The sale just dumps into PayPal, so there's like you call it sort of a gross net number. Let me use a very simple example so you can see what I'm talking about. So I'm going to create a dummy customer in this company called Amazon, and we're going to create a dummy Amazon clearing, right? Or a clearing. Okay, and the Amazon clearing we'll leave as a bank account, bank type. I don't care that it's cash on hand. None of that matters to me right now. And so Amazon will be some product I sell, right? So we'll just create some product, whatever, as an inventory part.
Well, they don't, but basically there's no, it's just like a bulk number that for lack of a better word, there's no like item sales that are recorded. It's just actually a sales number. That's fine. Just follow the concept though, because the concept is going to be the same. Okay. All right. So we'll just leave this all
Oh, go away. This part, I absolutely despise that they make me do this. I would never use that field anyway, but whatever. 0101, 2015. I always put some ridiculous start date in there just so it doesn't interfere with what I'm doing, because otherwise it almost always does. All right, so let's say the total sale that we're dealing with is for $1,000, right? So whatever it is, it's giving me 1,080 because of California sales tax. So let's just say no sales tax, just to keep it simple, okay? And I'm going to save and close. Okay, and then we're going to quickly run the balance sheet. Okay, and we're going to see that we have $1,000 in the Amazon clearing, right? Now I record the payment separately. Let's duplicate this. Okay, so we got a PayPal payment, but it came in for, let's say, $850 because we got charged $150 in fees. Let's just say, as an example. So here's what I do is I record, let's do it, the easiest way is we'll record a deposit into PayPal. Okay, and we'll ignore the undeposited fund stuff that's in here. And so we have to split this, okay? Because the sales clearing has to show, Amazon clearing rather, has to show the full 1,000 coming out, right? That whole sales receipts obligation has been satisfied, right? So we have to record it for the full 1,000. And then what I would do is I would have an account called processing fees or PayPal processing, whatever you want to call it, depending on whether you feel like you want a specific account for that. And let's stick that in cost of goods sold. Okay, and whatever the fee is, it should net this deposit out to what we actually got in PayPal. So if PayPal was only, you know, 850 or whatever, then we just say minus 150 here, right? And so this will show the right deposit amount into PayPal at the net after the fees. Normally, because of the way PayPal works, I would actually record the gross deposit. Actually, no, I take that back. I would, I would do it like this. We take 1,000 minus the fee, because PayPal shows that all on a single line item in its statement, right? It has a column that says, here's the gross amount, here's the fee, here's the net that gets credited to your PayPal balance. So I like to have the mirror image of that in QBO, which is why I record the PayPal part exactly like this.
Yeah, that's the way you had recommended. I was doing it by journal entry, but that's what we were doing.
Yeah. So this is how you do it. So now notice Amazon clearing zeroes out perfectly. I can reconcile that to 0. And my PayPal account has the right net proceeds amount that came in of $850, right? So this is a simple example, so you can see clearly the flow. Obviously, when you have a bunch of transactions, it's a little more complicated. But at the end of the day, that's why we make sure we can reconcile this to 0, this and any sales channel clearing. And then the payment clearing, which is PayPal. In PayPal's case, you have a statement you can reconcile to. If it's Stripe, it works very similar, although with Stripe, you would put the gross amount in one transaction, and Stripe shows you the fees separately, so that's just a check out of the Stripe account. And Stripe doesn't give you a statement per se, but what I do is I just reconcile that to 0, and sometimes I'm left with a few payments at the end of the month that haven't been swept out to the bank account yet, so that's the ending balance that I leave in Stripe. But I still, same idea, I still reconcile that to 0 to clear off all the money that came into Stripe against all the money that went out and into my bank account. So same idea, you just don't have an actual statement with Stripe. So PayPal is the only kind of sort of payment method clearing where you don't have to reconcile that to 0, because that they give you an actual statement where you can reconcile to its own ending balance. Any other clearing account, just about, I'm just going to reconcile to 0 every month.
So it could be not that it's accurate right now based on some ways, because I need to go back and revise how I was handling those Amex payments, because I was paying them as expenses out of Amex, but those need to actually be transferred into PayPal. Like, it needs to clear through that method instead. So that could be off. But it's possible, though, that I might have a true negative balance in a PayPal clearing account because that's the true balance of the statement at the end of the year, like what you're saying, you know, in that sense, just because of vagaries and the timing issues and stuff?
PayPal, you generally won't see a negative balance because if it goes negative, it's going to draw the funds out of the funding source to zero it out. But,
so it exists to keep itself at least at zero balance.
yeah.
Okay.
The only time, and this is probably very rare, where you might see a negative ending balance is if something happened on the last day where it paid something and then it didn't draw the funds in until the first day of the following month. But I don't recall ever seeing that happen. I think if anything, PayPal probably draws the funds to cover first and then pays it because PayPal's not stupid. Imagine they start paying things on people's behalf and then they go to draw the funds from the funding source and there's not sufficient funds to cover it. You know, PayPal's not going to put themselves out like that.
I misspoke when even now that I'm thinking about a negative in PayPal, they don't operate that way. They're very, very skilled at making sure that they don't overextend themselves.
Right.
All right, that's awesome. And thank you so much for that. And I wanted to say that just to make one quick comment and then I'll step away so everyone has some time to talk themselves. I went to advanced QBO training yesterday. And they talk specifically about that source and target. So that helped me understand the forms better. But I just was going to say, if anybody hasn't used the resources for the advanced training, that I highly recommend those, because just preparing for the training course by using the presentation and the supplemental guide, it was super, super helpful for me. Covered off a lot of areas I wasn't familiar with. And so I just put it out there. If anybody needs links to download the most current version, just let me know, or I can try to put it in the chat window if you want to go there and download the most current training materials that they have.
Cool. Thank you. Thank you. So on my screen real quick is, it did download that brain. You can see I've sketched out the flow using a kind of flowchart kind of format.
You're up with, all we see is your lake screen right now.
But you don't see where it says sales channels?
Sorry, I like your creative effort. I wasn't understanding that, so thank you.
Okay. All right, so everybody sees the sales channels. I've got Amazon, Shopify, and then just a generic website, and the website has a shopping cart, which is kind of truly the sales channel. I just gave the example here of WooCommerce, right? So the sales come into the sales channels, right? Then we have the payment methods. So from any given sales channel, in the case of a website, we might have Authorized.net, PayPal, and Stripe, right? We could have 3 different ways that people can make payments when they check out in your shopping cart. And then, of course, it flows from the payment methods into the bank account. So each of these get clearing accounts, and each sales channel gets a clearing account. Sales clear into the sales clearing and then out to the respective payment method clearings. And then they clear from the payment method clearings into the bank account, wherever you sweep those funds to. That's the process. And then it goes back to, again, my simple formula, sales minus payments equals 0, right? And I know it sounds oversimplified when I put it like that, but that's kind of the point, is it helps me think it through, that at the end of the day, that's what has to be true. That's the fundamental principle of all of this. Sales minus payments equals 0. And using that, and in one customer's case, reconciling their Authorized.net clearing, we have often found where payments didn't come through. That should have, because we saw the sales, and we saw from the sales side that the payment method was supposed to have been through Authorized.net. And then we go look into the Authorized.net account, and we can't find that payment, and end up telling our customer, hey, it looks like Authorized.net didn't fund this. And sure enough, he'd get in touch with their support and find out that the funds were held for this reason or that reason, right? But the bottom line is, doing this, and we talk about bulletproof books, this is one of the ways that I ensure that not a dollar of sales is missed and not a dollar of payments is missed. Because we'll find anything by this process when we reconcile it all to 0, and it will flush out anything that's missing, for sure, right? There's no way it's going to accidentally reconcile, right? So that's one of the ways that we make the books bulletproof for any kind of for any company, right? Because I've started using clearing accounts even on companies that aren't necessarily e-commerce, because at the end of the day, every company sells something and receives money, right, through some form of payment, right? And more often than not, these days, more than ever, they're being paid less and less by check and more online somehow, right? So again, every dollar of sales has to be matched with every dollar of payments, and then that has to clear into the bank account and reconcile, right? Minus the fees, minus any other expenses that might be associated, right? With Amazon, you have a ridiculous amount of fee line items for all different kinds of things they charge for, especially when you're doing, when Amazon is handling the fulfillment, right? When it's FBA or fulfilled by Amazon, then you have all kinds of fees associated with the fulfillment and the warehousing fees, and they'll credit you back if inventory is damaged and so on and so forth. So there's a lot of little things in between to reconcile. But in the case of Amazon, we have a biweekly settlement with a total that we can easily reconcile to, right? I can do a single sales receipt. Bear in mind with Amazon, and this is something I know I didn't make very clear when I spoke about this stuff last year at QuickBooks Connect. Your Amazon settlement will frequently cross over from one month to the next. And so to get the financial statements right, to get it bulletproof, we have to actually split that up into two sales receipts. One for the stuff that happened in one month and another for the stuff that happened in the next month, right? And there are apps that will break this up for you. I showed everybody a process last year purposely that was a little manual so that people could really understand this stuff fundamentally, so that you could especially understand when the apps are getting it wrong, and they often do, right? We were seeing a lot of errors with some of the apps we were playing with, last year. And ultimately, this way you have the control over figuring out when it's right, when it's wrong, and what to do about it if it's wrong, right? And one of the more popular apps for Amazon that a lot of people use, I ran into, checked it out, didn't like it because ultimately what I learned was that it doesn't put the detailed sales information into QuickBooks Online, which means I lose my reporting. And as a CFO, that's like a death sentence for me, right? Because the only time that would work is if the only place my customer ever sold was on Amazon, which in itself would be a big mistake in my opinion and experience, right? You never want to just sell on Amazon. The main reason being Amazon can shut you down like that overnight and you're completely out of business if you don't have other ways of selling your products. And I've seen it happen, right? So you never want to put all your eggs in that one basket. Granted, if you're selling, if you're an e-commerce company, you need to be selling on Amazon, but you also need to not be only selling on Amazon, which is why I would never want to put a customer in an app that, first of all, only serves Amazon sales, and secondly, leaves the details out of my QuickBooks Online reporting, right? Because I'm going to do a video very likely later today that's going to show you how I take data out of QuickBooks Online and extract it into a spreadsheet so that I can run pivot tables on it so that I can analyze the sales. Because at the end of the day, we're doing a lot of work in our industry, especially the apps, at creating all these pretty dashboards and things that give us nice information. But I have yet to see one that really gives us the kind of information I'm going to show you that I'm looking for in this video as a CFO. Because at the end of the day, yes, of course, I want to make sure I can tell my customer how much money they have in the bank and how much money they made, and I want to show it in pretty charts and graphs. But what I really want at the end of the day is data. I really want to be able to go into the data of the sales and say to my client, here are the products that are selling, here are the ones that aren't, and I want to look for opportunities in that. I want to be able to say, hey, customer, guess what? Here are your top selling products, and here are your top customers that aren't buying those top selling products. Go send them an email. That's the kind of data that our customers want. And that's the kind of data that we can and should be able to provide if we have the right ecosystem set up, right? So if I'm going to use an app, I want to make sure I do the research and make sure that that app isn't just going to handle the transaction, but ultimately I'm going to be able to get the critically important reporting that I need to be able to get out of my accounting system so that I can be that strategic advisor and advise my clients on what that information tells us or what we can extract out of that information that's going to literally help them grow their sales. That's what the customers want at the end of the day. And that's why I put a lot of time and energy into building these processes to make sure that it is bulletproof so that then I can turn around and rely on it and then provide my customer with the data they need. And guess what? Most customers already know how to read their P&L. They already know how much money they're making or not making. The kind of information I just described, where I can show them what's working and what isn't, and how to identify where to take what's working and what distribution channels to send that through, that's the data that our customers want. That's the kind of stuff that's going to have them referring clients to you right and left because they can't get over how good the information is that you're able to provide them. Rant over.
I'm curious how many people in the group are doing e-commerce work right now? Any hand?
And this doesn't just apply to e-commerce. That's what I want to make sure is clear.
Well, I guess in the sense, if anybody's taking Square payments, then it's just with the e-commerce, it just adds another level of complexity, I think, because there's just a volume of work to do too. But
Yep. Yep, but you're going to see in the sample video, because I'm going to be using the same QBO sample, which is like a landscaping company. And you're going to see, I'm going to show you that analysis. They're not e-commerce, but they still have the same, concepts in terms of here are the products and services that we sell, and you want to be able to analyze who's buying what and who's not buying what. But the most classic, lowest hanging fruit for really valuable data you can provide your customer, the first thing you should try and provide them after you know you've got the books nice and clean so that the information is reliable, is to be able to show them your top selling products and which are and your top customers, and then which of those top customers aren't buying those top selling products, because now you want to reach out to them and say, hey, customer, based on your previous purchasing history with us, we think you're going to love these products. And you send them an email and offer it to them. And that's how you can literally give your client information that will boost their top line directly. And that's where you can provide real value beyond just giving them a balance sheet and a profit and loss that they can use to get a tax return filed. All right, I'm looking around to see if we have any sort of comments, questions. Nope, nothing. Everybody's quiet. Either that means I talk too much or everybody's just blown away. I probably just talk too much. Courtney says, I have one e-commerce client. I've been using the revamped PayPal app. This client has low volume, but it's been working well. Yeah, I'm still not a fan of the PayPal app because it brings in the sales separate from the fees in separate transactions. And if it's low volume, then it's easy enough to manage. But as soon as the volume ramps up, it's very difficult to reconcile. It's just clunky to reconcile, as opposed to having a single transaction, gross minus fee equals net, where that net amount is going to reconcile when you're reconciling that PayPal statement. And it's been an issue for a while, and they keep coming out with other apps and versions of the apps that presumably will handle PayPal well. And every time the first thing I check is, okay, so did we finally learn how to combine the gross and the fee? And no, not yet. Still working on it. So, and that's the other thing I always think about, especially when it comes to building systems, is, today might be one scenario, but what are we looking at for the future? And how is the current system going to work in the future when we hopefully have a lot more sales and a lot more volume and a lot more transactions? Or do we have the right infrastructure set up with the right processes so that we're going to be able to manage this when it scales, right? That's the question you always want to keep in mind. And it may even be appropriate to not be set up for scale just yet, but as long as you know that the way you are set up now is going to lend itself to easily evolve into scaling when you need to, then you're okay. But that's the kind of stuff we want to be thinking about, because the systems we set up today may not work in a year from now if the client's, growing very fast. Teresa says, I have in the past for a short time, but e-commerce seems to be famous for companies getting into it and not knowing what they're doing with the different sales channels and paying platforms. And I think you've all just seen a pretty good example today of how that can get infinitely complex. And the owner I have was famous for not getting me the data or access to data for me to do what I need to do without fighting it. Got to have set standard operating procedures for your clients in this industry so they don't drive you nuts. So, and the answer to that, by the way, is something we've talked about a lot in 97 and up, which is, you have to force your clients to empower you to get what you need. I never, ever rely on a client for anything. I need access to, I want their bank account logins. I want everything so I can get in there and get the statements I need. I have logins for every sales channel. I have logins. I never want to have to stop and wait for the client to give me something, because that will almost always create friction, where if I've scheduled the time to work on the client and I don't have what I need, oops, now I'm stuck. And granted, I always have plenty of work to do. I'll move on to something else, but it slows me down in my tracks. It stops me in my tracks and makes my process inefficient when I allow for that, right? So to me, it's critically important, especially in a business like e-commerce, but it's a rule I apply across the board no matter what industry the client is in. If you want me to handle your books, if you're putting your confidence in me and paying me good money to handle your books, then you'd better have the trust in me that I need you to have to give me everything I need so that I am completely empowered to get what I need without ever having to wait for the client. And in a rare case where for whatever reason I decided to let something go on that, what I have done, and I've put it in the agreement with the client, is that if ever I go to do work that I've scheduled time to do and I don't have everything I need, they're going to get charged $150 for that. And it's right in the agreement. If I sit down on any given day to do work and I haven't been provided with what I need by the client, there's a $150 fee for that. That covers the time where the energy or the effort that will be required for me to shift gears and do something else because they didn't give me what I needed. And that's a way, if for some reason you really want to work with the client, but they absolutely can or won't give you the access you need, then that's the catch-all trap that you can put into play where you're able to, sort of force their hand at it and say, well, then if that's the way you want it, then this is what it has to be. You have to, you're going to get charged for it if you don't do what you're promising me you're going to do, which is to make sure that I have everything I need, timely. And that's that. All right. Somebody says I got to leave. Bye. I can't tell who that is.
Matthew and
Oh, Matthew and Linda. Goodbye, Matthew and Linda. I guess they're gone already. And we're technically out of time here. So let me just check the feeds here. Facebook. Mariette says you're all making me hungry because everybody's eating on camera.
It's true.
That's why I went and got food.
That's funny.
I like that point, Seth, that you made at the end there. I like that.
Which one?
The charging,
Oh, the fee, yeah.
Yeah.
Hey, Seth, it's Courtney. Do you have time to go back to the PayPal thing just for a quick second?
Sure.
I just want to make sure I'm not missing anything because as I've been using this PayPal app, it's connected, like a bank. So the transactions are now coming in like a bank feed.
Mm-hmm.
And when the transaction comes in, it splits it out, the sales and then the fees, just like if you were to go into any bank fee transaction and, if you needed to split it out to different categories, it kind of comes in like that.
Right.
It also captures all of the sales information. So I haven't been running into the reconciling issue. So I'm wondering if I'm missing something. Is there?
Well, you from exactly what you said, it sounds like you should be because, like you said, it's bringing in the sales in one transaction and the fee in another. And when you look at
it's all the same transaction, but it is, how you can go into a bank fee transaction and split it to different categories. That's essentially what's happening.
So it comes in with the split. Okay, then that's not something I've seen. I'll have to take another look at it because that was my point is every time I've ever looked at these PayPal apps that claim to make improvements, that's the one thing they haven't addressed. It sounds like this one has. So which PayPal app is this? Because there are several.
Sorry. It's whatever hold on, I can go look. It's whatever the latest one is. I have to go back to my.
All right. So if we just go into the apps though and look for the PayPal app, it should be clear.
Yeah, that's what I'm going to look for now.
Okay.
The exact name of it is because I know they did have different, versions of it and so forth. But
because that's always been the problem with it.
Yeah. And then I just can reconcile it right to the statement, just, match up.
No, that makes perfect sense. If it comes in split, gross and fees, that's perfect. Yeah. That's exactly what they never did before.
Right, because that's why this was such a pain before, like trying to get everything to reconcile. So let me see. This is, it's called Connect to PayPal.
Right. While you're looking it up, it's called Connect to PayPal. Okay. Larry in the comments is asking how often have I collected that $150? Larry, I've never had to because putting that provision into place has clients don't want to have to pay that $150. If push came to shove and I had to charge somebody the $150, all work would stop until I got it. I would be that hard on it. So sorry, Courtney. I didn't mean to.
That's okay. No problem.
So it's called Connect to PayPal?
Connect to PayPal, yes.
Okay. So, all right. So everybody look for that app.
Yeah, and see if it works for anybody else. It's been working fine. Like I said, this client has low volume, so I haven't run into any issues, but I do like that, it comes in split already. I don't have any problems when it comes to reconcile, and it still captures all of the sales detail.
Right.
So I can
as long as it captures the proper gross and fee split, then that solves the whole problem right there. Because the expense part of it has always worked well, because that's very straightforward. The amount comes out. If I've got it in QuickBooks, it should just match right up. It's always the fact that they used to always bring in the gross sale as one transaction and the fee as another that created all the problems. So.
All right. Okay. Thank you for going back to that for me. I appreciate it.
My pleasure. Thank you for sharing that with us, because I just lost confidence. I haven't bothered to check the app in a long time because I just kind of gave up on them. I'm like, all right, these guys are never going to address this, but I guess they actually have now.
Yeah, they finally listened to someone like this.
Yep. All right. So
right.
if anybody else has any questions, you know where to find us. Most of us, all of us, I think, actually are in the Between Wall and Main Strategy Forum. If you would like to check out 97 and Up, because this is what we do twice a week for an hour, just go to www.97up.nerdenterprises.com. You'll see a little form. It asks you for your name and email, and then it will just send you some information for how you can sign up and try 97 and Up for 1 week for $1. So come check us out. We hang out twice a week on Zoom just like this, and then we hang out 24/7, 365 in our Slack workspace. So there's that. We give each other a lot of ongoing help and support there all week long, all day long, all night long. So join us, talk to some of the other members, find out what they think. Don't take my word for it. I'm extremely biased, but I do think it's wonderful.